Hey, everybody. Happy Tuesday night here in the DMV. This is Kevin Grolig, and we're doing our live stream tonight. And I'm super excited tonight about our guest and what we're going to talk about. So I'm going to kind of just throw out a little bit about what we're going to go through this evening. We're going to talk. We got to take the 800-pound gorilla out of the room tonight, and we're going to be talking about the Trump's attempt to shrink the federal government, to basically exit out many of the federal employees. And of course, that's going to have a rippling effect potentially nationwide, but especially here in the DMV, because we in the DMV have 15% of all civilian federal employees here in the DMV. So while we don't have them all, we have a very good portion, and probably higher than any other place in the country. So we're going to discuss that. I've got my guest who I'm super excited about, Hillary Cochin with Direct Mortgage Loans. I've worked with Hillary many times over the years. Super creative, super awesome, knows her stuff. So we're going to talk a little bit about what we see going on maybe within the DC market with some of these, federal cuts that are looming. We're also going to talk a little bit, what do we have here? We're going to talk about just some trending things that are going on in the mortgage industry, talk about some real life stories of some wins that are taking place, because I know that we're all kind of hearing a lot of, sometimes much negative media here. But today we want to talk a little bit about some wins and how we can help buyers and potential sellers win in this marketplace. So with all that being said, I want to introduce you to Hillary Cochin with Direct Mortgage Loans. Where are we, Hillary? There, I think she's coming in there. There she is.
Hopefully.
So how are you doing this evening?
I'm doing great. I'm excited to be here. One of the things I love about you, Kevin, is that you bring the positivity as well. So I love that we're starting off making sure we're going to emphasize here that everything's going to be okay. And we are going to use any news that comes our way to our clients' advantage on the buy and sale side.
Yeah. Well, I will tell you that I tend to be very positive on camera. And then sometimes when the camera stops, not as positive. But you know what? Same with you. I mean, you were always very upbeat and everything. And I love it. And I think right now, with a lot of the uncertainty and unpredictability of things, I mean, what people really need out there, it's a little bit like COVID, it reminds me, where it's just like, you know what, like, let's separate facts from fiction, fear from, facts from fear, and just, somebody's got to be a level head out there. So it may as well be us, and to help people navigate through some, tough times, some uncertain times, and I think that's really much needed in today's marketplace. So anyways, so Hillary, why don't you tell the audience a little bit about you and, kind of how you got started, Tell us a little bit about Hillary.
Yeah, absolutely. Well, I'm located in the Montgomery County, Maryland area, but I'm licensed in DC, Maryland, and Virginia. That said, I have a large network really across the country, though I am from New York City originally. And that's my own personal running joke that any mortgage company I've ever worked for has never been licensed in New York. So I'm just constantly trying to convince my friends and family from back home to move to places like the DMV area, primarily so I can help them with real estate. But I've been in the business over 10 years now. And, I work with a lot of different types of clients, unique financing, love utilizing programs, as you know, Kevin. Personally, I love to golf, so that's my main hobby. And I also recently got married, something that we have in common here. So that's
me
a
as well.
Me.
Right there.
Yeah.
So a few questions on this. So how did you end up in the DMV from New York City? And at what point in time did you lose your accent?
So I really never had that New York accent, which I get made fun of almost. I'm told I have an accent, but no one can figure out where it's from. But I actually went to school. I went to college at the University of Delaware. So naturally, I've just been making my way south a bit. And fresh out of college, I majored in sociology and psychology. I applied for every job I could imagine under the sun, just going online, filling out jobs. And the only place that would hire me was a mortgage company as a receptionist. So that's my glamorous story about how I got into the industry, but truly I fell in love with it. Kevin, I love details. I love numbers. And so I thought naturally I would fall into more of like the processing and underwriting side, which is the more paperwork side of the mortgage industry, and fell in love with the sales side of it. So here I am today.
Well, you know what? I would say that anybody who's majored in like psychology or sociology is perfect for anything having to do with the real estate business, because God knows, I think one of the things I've heard out there is the three most stressful things in life is death, divorce, and moving. And so oftentimes, at least I probably more so from my side of the fence than your side of the fence. Oftentimes, you're dealing with two or sometimes all three of those things at one time. I have people that are selling their home because of a death or divorce or whatever. And probably you also every now and then have people that are buying a home because they got divorced and they're buying another home. And then you factor in moving, which is just stressful enough. I mean, you really do need a psych or sociology major to be able to navigate through this. Because I find my job these days is probably just as much a psychotherapist as it is a Dr. Phil, I guess you could call it, as it is a real estate agent, especially here in the DMV. And I would imagine in many of the metropolitan areas.
Absolutely. And especially in this market specifically, because it's been a fun one.
Oh yeah. It's definitely been interesting. So, well, I mentioned it earlier when I was kind of doing the introduction. You and I kind of had some topics that we were going to discuss tonight, and we're still going to discuss some of them. But I think with all that's going on, that's super hyper local to the DMV here, we got to kind of take the 800-pound gorilla out of the room and discuss with people. A lot of what's on people's minds is, the new Trump administration and a lot of the cuts that they're making to, federal employees. I mean, once again, a lot of them are here in the DMV. You know them. I know them. We all have friends and family that are part of the federal government. And I think everybody's feeling a lot of unease. So, what are your thoughts on what you see, with a lot of this going into a spring market here? Do you have any personal experiences or just kind of thoughts of what you see going on out there right now?
Yeah.
And I know it's early, so,
Well, that's part of it, right? Is nothing in the real estate world likes uncertainty, whether we're talking about mortgage rates, whether we're talking about demand, people willing to get pre-approved, let alone out there placing offers on properties. So we are in uncertain times. That's a reality that we're facing. So I just find it's more important than ever for us to be real with each other and ourselves as far as, is it something where you personally have job stability concerns? And that's something that if you do, we have to weigh into the decision making, because this is a huge financial investment. And that's something that I know you and I both really care about for our clients on their behalf. I would say at the same time, this is also so new that we haven't seen the effects of this yet. We don't exactly know what this is going to mean. It's really a day by day situation. So, Kevin, I know you and I together both, we are staying as alert as we can be and making sure that we can guide our clients through this. Overall, I would say the one piece that we have received reassurance for in the mortgage world is a lot of mortgages is strongly tied to the federal government, not just rates, but even verification systems that we use and so forth. So we have received some reassurance that those systems that we rely on to be able to close loans are still going to be operational. So we have that going for us. But outside of that, it's just a day by day thing and keeping a close eye on job security. And then what ripple effects can that cause if it does really disrupt the market?
Yeah, well, I 100% agree. I mean, the situation is extremely fluid right now. And I think it's just one of those things where we're in an industry where we're just going to have to, like you say, play it day by day, see what goes on. There's never a one size fits all. Everybody's situation is a little bit different. But I do find this to be very similar to, the whole COVID epidemic when that first started in 2020. And to be quite honest with you, I think, just to kind of throw it out there, I mean, that's really kind of when I leaned into video, because I felt like, okay, I'm not, hell, in the early days, I wasn't even sure if I was considered, an essential, essential for going out and meeting with people. And even if I was, there were so many people who didn't even want to meet with me or anybody, everybody was hunkered down, like kind of, gophers down deep in their hole. And that's kind of when, I decided, let me lean into video because, I can at least talk to people about the things that are going on that I see on the ground level, and I think this is kind of similar to that, where it's just like, we're going to have to wade through this. It's day by day. And, we're just going to have to go through it. But I also feel like, you just have to be the calm one amongst a lot of chaos and a lot of concern out there.
Absolutely. And I think the main question I get on the mortgage side is typically tied to interest rates. And we all joke, and I know on past live streams, you've talked about this as well, that none of us have a crystal ball. We wish we did. So we don't know what's going to happen. But I would say overall interest rates, while we would all love for them to be lower, relatively small fluctuation in rate, it's not going to have a huge difference on people's purchasing power. So when I think about tariffs, the first place I go in my mortgage head is, okay, well, is that going to increase costs? And if it increased costs, our number one enemy for mortgage interest rates is inflation. And if we start getting bad inflation reports, interest rates are going to increase again. So we just don't know exactly what this looks like. And, even something like rates, they've calmed down a bit again. It was only, a handful of months ago that interest rates were like a full % higher than they are today. So we've seen some relief. We're going to remain optimistic, but we're also going to be real about it and just make sure we're approaching it properly, whether it's when do we lock in an interest rate if someone's under contract, and how do we navigate the home search?
Right. Well, Hillary, while we don't have a crystal ball, we are fortunate enough tonight that I have my magic 8 ball. So when in doubt, we're going to go to the magic 8 ball, and I am going to do it right now and say, will all of this, that the Trump administration and a lot of these cuts that we're hearing about and starting to kind of feel and see, will it be catastrophic to the DMV market? So we're going to pull it up right now. And believe it or not, you won't be able to see this, but it actually says ask again later. What the hell? So,
it could have been a worse answer, so I'll take it.
It could have been a worse answer, and you know what? We will refer back to it, but it literally said ask again later. So, way to take a stand, Magic 8 Ball. Nice take. So, anyways, we've got a question that comes in from Kristen. She says, I'm a federal employee who is concerned for my job. How do you think all of Trump's cuts to the federal government will affect the real estate market? So kind of talked about that a little bit, but, and once again, it's day by day. And we got, between you and me, we have magic 8 ball, but, do you see huge changes? This spring, especially going into a spring market.
Yeah. And Kristen, my heart goes out. It's not a comfortable position for those employees to be in. It's something that I want to make sure anyone who's listening to this knows, that whether it's me or hopefully whoever they are working with as their loan officer, we are on your side as your loan officer. So if it's something where you are about to place an offer on a home, or you're already under contract and you are concerned about truly a loss of income, I want to be real with you. It could impact your mortgage approval. Typically, if you're even put on if you're put on an employment freeze and you're not receiving your normal pay stubs, we can't close typically. So the sooner we can tackle that as a team, the better. Now, the question is, does all of this really go down the way that it sounds like it may, right? And then the question becomes, and Kevin, almost direct it back to you here, is, well, what does that mean for current homeowners, people who own property, government workers are some of my easiest clients. They're typically salaried employees, good work history, very easy to qualify for on that front. If you've made this life-altering decision to purchase a home and take out this mortgage expecting a certain pay, and that changes, well, now your comfort level in that mortgage may also change. So I think the question is, should this happen? I don't know what you think, Kevin. Do you think that we're going to see a shift in inventory? Because that's been a big pain point in our market specifically.
Yeah, I mean it's funny because we had our meeting at our office. We had about 75 agents in the in Monday, and that was like the topic du jour is like, what we all see going with that housing market. And I honestly think it's just going to, once again, it's a day by day thing. Nobody knows for sure. I predicted that the real estate market would collapse. I think like a lot of people did, right? March of 2020 when COVID came in, and yet it was like gasoline on a fire. So what the hell do I know? And Magic 8 Ball won't take a take. But my opinion is I do think we're going to see a little bit of the reshuffling of the deck. I think that what we're going to start seeing is I think there's going to be some people who are probably closer to my age, Hillary, where they've been in the federal government for 20 some years, 30 years, and they're like, you know what, peace out. I'm done with this. You know what? Let's go ahead. Let's take retirement. Or you know what? Let me move to the private sector. I've got skills. I can go to the private sector, probably make more money and everything. And this might be the break I'm looking for. And I think there's others that maybe younger who, probably have greater concern with that and everything. So I do think that you're probably going back to what I was going to say. I kind of jumped around. But a lot of the people that say peace out, I think that there could be properties that start going on the market because they're like, you know what, I'm done. It's time I'm in my 50s. It's time to relocate. I want to get out of here. I'm sick of this crap. I think that you have other people who move further out, during the early days of the pandemic because they, wanted to social distance. They thought that maybe they would never have to go back to work again. So they moved further out, in Montgomery County or maybe even into Frederick County, just thinking, now some of those people, if they're going to have to go back into work, all of a sudden Frederick County, when you're in Bethesda or you're in DC, that could be no bueno. And I think that you could start to see a lot of people start to kind of start putting properties on the market to move back closer in when, once again, in 2020, 2021, and early days of 2022, it seemed like the shift was to move out towards the suburbs and further out. I think you might start seeing a little bit of reshuffling there. So it's a little early to tell, but I do think that we're going to start seeing more inventory hit the market. People just kind of saying, you know what, I'm done. Let's leave the area. And other people who are like, I need to get back in closer to work.
Yeah, I completely agree with that. I've actually started having some of those conversations, primarily just people starting to plan for the what if. And it's exactly that. People who are living farther away, they were used to remote work, and now they have the reality of needing to be close to work to get ready to go back to the office.
Right. So, Hillary, we got another question here. It's from Chris Balto, and Chris asks, would it be a good idea to refinance now before things maybe get worse? And that is definitely one for you to tackle there.
Yeah, no, and it's a great question. And even just over the past 4 months, maybe I have refinanced a handful of clients in rate and term refinances. So rates have come down a bit since people were buying. The way I like to approach a refinance, it's really simple. It's a break-even period. It's cost divided by savings. And now this is assuming we're talking about a refinance purely for monthly payment savings, not for something like pulling equity out. That's a different ballgame, though certainly something that people can do. So when it comes to a rate and term refinance, I'm looking at the cost of the refinance divided by those monthly payment savings. And that is going to dictate when a refinance makes sense. So if it is something that we look at that and your break-even period is 6 months to 12 months out, yeah, I say go for it. If you can have, even if it's not as much in savings as you want, I think that we are going to be, personally, my opinion, but I do think that this is the interest rate world we are going to be in for the relatively near future. If savings opportunities occur, I would personally hop on it.
Yeah. So, I mean, are you seeing, you would know this better than me, but when you say a break-even point of 6 to 12 months, is that even possible right now? I mean, obviously it depends upon what rate someone has and what type of rate they're able to refinance to, and of course the costs involved. But I always look at break-even points as being close for like 3 to 5 years or so. I mean, especially in a market where the interest rates really have, they fluctuate. Let's be honest, since 2022, they've pretty much fluctuated from like the low sixes to up to 8. And I would say the average, would you say, has been about 7%?
Yeah, I'd say that's definitely a fair average. We every once in a while get teased a little bit where interest rates drop quite a bit lower. I think we hit close to the low sixes not too long ago, and then they reverted a bit when the Fed said that we were going to slow down on these rate cuts here. With that said, that kind of short break-even period absolutely is possible right now. The way it works, without getting too granular, is lenders are giving credits for higher than market interest rates. So it's not anything magical. It's literally math. It's just how the market works. So, if we can keep those refinance costs relatively low, even if it's not a huge monthly payment savings, but it's significant enough to you and your family and whatever that means to you, absolutely, we are still seeing that, break-even periods within 12 months.
Yeah, because it's interesting because I have a daughter who bought a house in New York, and she was asking me about refinancing. I mean, she bought last June. I don't really remember exactly what the rate is and everything, but I was talking her through. And you're not licensed in New York, are you? You're from New York. Okay.
Exactly.
But anyways, I was kind of talking her through how to determine whether that makes sense or not. And it's really, like I say, the break-even point is everything. And then, of course, then it has to do with how long you plan on living there as well. So
absolutely. And here's my PSA to everyone too on that front, because when it comes to a purchase, I find that we're all really obsessed over the interest rate, and we've been taught to be. And then sometimes I reach out to clients and a refinance looks really, really good, and they're just hoping rates move lower, and then they wait it out, and then maybe they never get lower. It takes too much time. So just the break-even period, that's the focus.
Yeah. Awesome. So we have another, actually, I was texting somebody here and I spell checked put something in there that really shouldn't have been there. But anyways, my bad. I was listening though. So we have another question. You and I in this business have to be, master multitaskers, so you got to be able to listen while you're texting. And anywho, so Ryan Doyle has a question, and Ryan asks, if I'm looking to buy a first home, what do I need prepared, and what do I need to avoid?
Great question. Yeah. And here's what I would say. We talked a little bit about the COVID timeframe and the impact on the industry and real estate, and how you were showing homes and meeting with clients. It also changed the mortgage world quite a bit as far as advancing us lenders, as far as our utilization of technology and how relatively easy it is to go through things like the pre-approval process. So I'll only speak on my behalf and my company, Direct Mortgage Loans behalf, but the actual process to get started, you always want to start with a pre-approval. So it's an online application, and they're pretty quick and easy. Usually I'm told it doesn't take more than about 15 minutes for a client to fill out. I would say personally, the way I operate that's different than many other lenders is the level of review that, myself and the consumer does. Once I have that information, I put everything, I call it a consultation. We are looking at different mortgage options side by side, but I'm really teaching clients how we're going to be working backwards on future homes of interest to understand what that home means for them financially. Because Kevin, this, right? Like if you're let's take someone who's looking at a condo, and we see in our market, I don't know, what do you see for average condo fees?
Ooh, they're going up. It depends, but let's just call it 500, 600 a month.
500, 600. And then at the same time, we see other places that their condo fees over $1,000 a month.
Yeah.
Right. When it comes to qualifying, all us lenders really care about is the monthly payment. So if I'm a lender, which I am, and I go and I tell the buyer, hey, go tell Kevin you're good to look at properties up to a $600,000 price. And then all of a sudden you add in condos to the mix, you have those higher fees, maybe the payment's too high. So when you're ready to get started, that pre-approval process, it's more than that letter that the lender gives you so that you can start placing offers. It's the information, the hand-holding, the advice, the education that comes with that whole process, just to better equip you for the home search. But that's really it. You're focusing on an online application, eventually some documents, and you'll be ready to roll.
Well, and I'm just going to give you a little bit of props here. That's one of the things that I've always appreciated in working with you is just the level of detail. Number one, you mentioned that earlier, the level of detail. You are really an expert of your craft. I mean, you just are. But the thing that really separates you from a lot of mortgage lenders is the ability to connect with those borrowers and to be able to, for lack of better terms, oftentimes handhold and and shepherd them through the transaction because as you said earlier, what you do is math, but at the same time too, it's like, this is very emotional for purchasers, especially first-time home buyers, but really just about anybody. There's very few people, maybe investors, who are not emotional about a purchase. And that's one of the things that I really appreciate about you most is that, and it takes, be honest with you, it's a little selfish comment, takes a little bit of the pressure off of me.
That's the goal.
I can be pretty good at that, but if I got a little help in doing that, that's always a good thing. So that's just for anybody listening out there. That is very rare to find between real estate agents as well as with mortgage lenders, is somebody who really takes the time to kind of walk you through it, make sure you understand it, and it's not just spreadsheets. I mean, spreadsheets are a part of it, and math is everything. Well, math is a big part of it, but somebody who can kind of help you understand it and make sure that because now you've entered really more of a professional relationship, more of an advocate, and more as a trusted advisor.
Yeah, and I appreciate that so much.
Yeah. So, anyways, I'm sorry I slobbered all over that one. So I have another question that came in, and this is from Erin. She's asking, is there a good rule of thumb regarding the percentage of condo fees versus mortgage payment?
I wouldn't personally worry about that. I would say there are things that we have to be mindful of. So, for example, the average client right now is getting into a 30-year fixed mortgage. Now, do we care about the fixed aspect of it so much? To some extent, yes. But the hope is that if anything, we're going to have a refinance opportunity and get someone into a cheaper mortgage payment in the future anyways. Other parts of your mortgage payment can change. Homeowners insurance, real estate taxes, but so can a condo fee. So if it's something where, again, I talked about this when we go through a pre-approval, what we're looking at is your maximum mortgage payment based on your gross income and your reoccurring debts. And if it's something where you are tapped out at the very top of what we say you can hold for a mortgage payment, I would want you as my client to just be aware and mindful that those condo fees can change and make sure that you are comfortable with that. But no rule of thumb. I've had clients where well more than half of their monthly payment is simply condo fees.
Yeah, I mean, and I don't know, you're probably seeing it, but I'm probably seeing more and more of that because condo fees definitely seem to be on the rise, and I'm seeing more and more condos where you've got either special assessments, especially in some of the older ones that we tend to see, I mean, I'm not licensed in DC, so I'm not going to necessarily comment on DC, but in the lower parts of Montgomery County, in areas like Silver Spring, Chevy Chase, some of these older places that were built in the 60s, 70s, we're starting to see those fees are really going up and special assessments. So that's definitely something to keep an eye on too,
Absolutely.
And while, good.
I was just say a lot of it's tied to the insurance industry. Talk about something that's timely and in conversations, maybe not so much daily for the average buyer or realtor, but we're seeing a lot of disruption in the insurance industry. And part of your condo fees goes towards a master insurance policy for the whole building. So if insurance costs are going up, those fees typically are as well.
Yeah. Yeah. Good question. Good point. So Kristen's going to give a little bit of a shout out here. She says, working with Hillary personally on buying my first home, she was absolutely amazing and truly helped me every step of the way. Made it so much easier for me to feel comfortable with my home purchase. Well, thank you for mentioning that, Kristen. Hopefully she had a good realtor as well.
No plug for the realtor, huh?
I don't know. I mean, anyways, well, let's see what she has to say about that one. I'm sure there'll be a little comment.
She did.
Okay, good. So let's kind of mosey on along, and if we get questions, my dad was helpful too. Okay, so let's kind of move on to a different topic here. Unless, like I say, people chime in with questions, you know what, we can always pivot on this. That's one of the things I love about this is, you know what, we go in with a game plan, but sometimes you get punched in the mouth pretty quick and you got to adjust. So if any questions come in, we are happy to answer those. But we're going to pivot right now. And Hillary, talk about some of the common trends that you're starting to see in the mortgage industry. You know, like what are some of the typical common conversations that you're having with home borrowers? I call, you know, you guys in your world call them home borrowers. We call them home buyers. So I'm going to talk in your world here. What are some of the typical conversations you're having with home borrowers?
Yeah, great question. I feel like there's a lot of trends right now. I would say the first is, and some of you who weren't in the craziness of the market when interest rates were really, really low and really the height of COVID. So you'll have to maybe take our word on it, but it was brutal, Kevin. You know, like when we had clients placing offers on properties, it felt like every property was so incredibly competitive. And yes, our mutual clients had a great team behind them, but there's there's only so much that we can do. So for example, if you are a prospective home buyer and maybe you have challenge credit and we can get an approval, but maybe we're using a loan program that is known as being more lenient for credit challenges, or maybe it's something like we're using down payment assistance, or very commonly, maybe it's something where we need some closing cost credits for the buyer on behalf of the seller. We couldn't win a contract. So what I am personally experiencing is we have had so many clients go through the pre-approval process, do all the right steps. Most of those clients in this instance are still renters, and they just were not able to compete. And with every piece of bad news in our industry comes good news or comes opportunity. And so when we have some softening, even if it's in only certain areas of this market, it opens up those pool of buyers to make home ownership a reality. So the first thing I would say that's been really huge lately is just the ability, though don't count this as fact because it depends on the property. There still are many properties out there that are highly competitive, but there are properties that are sitting for longer. And there are sellers that are more, I don't know, desperate sounds like an awful word, but they're more willing to negotiate with the buyer. And we are seeing some really hefty seller closing cost credits.
Wow.
And that's been pivotal because, again, you know, even just for qualifying, I say us lenders, we always come back to mortgage payments, but that's a reality for our clients as well. If it's something where someone's been really working hard to save up, but they have this massive credit card debt that's costing them 20% in interest. Now, if they don't need to use all of that cash for the home purchase and they could wipe out that credit card debt, well, what's that helping with? Affordability pinches that a lot of us are feeling right now, especially when you're thinking about buying a home. So I think that's the main one that I see that is exciting because it hurts my heart, right? When you have someone who really wants to buy and it just hasn't been able to happen for them quite yet. And now it is. What's another one? I would say, I mean, just mentioned it, affordability. So as rates increase and as home values in most areas, at least in our market, have also been increasing, you know, it's tough when you look at those mortgage payments relative to the home you're buying. It's a little bit of sticker shock sometimes. That's a reality of what we're seeing. So it's okay, well, how do we fight this? How do we combat this? And maybe it's something like an interest rate buy down. I have some different opinions on that maybe we can cover another time, but you can do things like temporary rate buy downs. There's, you know, a 3-2-1 program or a 2-1 program. You can literally get into these programs that are getting your interest rate down by a full 1 or 2% over the first couple to few years of the loan.
So why don't you tell us a little bit about how those work, with the buy downs, and, you know, how potentially maybe a buyer can get a seller to help pay that.
Yeah, absolutely. So we like to say, and this is Kevin's realm more so than mine when it comes to negotiations, but when you put your buyer hat on, you really want to think about the seller as well. What do they need or want to walk away with from this transaction, dollar-wise? And so if a home is listed at a certain price and you have the wonderful expertise of Kevin on your side, and he says, you know what, I think that we can get $10,000 off on this home. Well, the first question is, okay, do we just go in? There you go. Do we just go in and do we offer a lower price? And the way we decide that is we ask the magic 8 ball if that's the best decision. And it may say, yes, let's do that. Or it may say, let's go for a closing cost credit. So in the seller's shoes, whether they are selling their home at a discounted price relative to the list price, or they're giving the buyer a cash credit to use towards their closing costs, usually it doesn't matter to them too much. They just care about what they walk away with. So when we are able to get those really hefty seller credits, we can also get a bit more creative. Those buy down programs, it's different than when you hear the term paying points. So when you're hearing paying points, you're paying a one-time fee tacked onto your closing costs. It buys down your interest rate by a little bit. The temporary interest rate buy downs are seller paid concessions that are basically subsidizing future mortgage payments. So what it's doing is it's taking that seller credit and it's calculating that discount on your mortgage payments over usually, again, 2 to 3 years. It's letting buyers kind of ease into this new mortgage through lower mortgage payments, but they have to be prepared and they have to be qualified that those payments are going to increase once those temporary buy down clauses are over.
Right. I mean, yeah, and it's just good for people to know that some of these things that are out there and be able to work with somebody who, once again, gives great options and choices. I mean, you've really got nothing to sell other than just, obviously, being able to help people and make good decisions, good, smart decisions for themselves, and being able to know about all the options and choices, I think is imperative.
Yeah. And it's fun too. It keeps our job unique because everyone's different. The solution for one person is going to be different for someone else.
So we got more questions that are coming in, Hillary.
Right.
So Chris asks, what's the number one mistake you see first-time homebuyers make when applying for a mortgage?
Oh man, there's a lot of mistakes.
I'm not on your side of the fence, but I want to hear what you say because I'm gonna chime in on that a little bit, but I want to hear what you say first.
I would say just like letting the fear of the unknown impact you in a crippling way. That sounds very dramatic, but I do mean it, where I have clients, first-time home buyers constantly, who are referred to me, they want to buy, and it seems like they just think making that first connection with a lender is such a serious, heavy decision. And it doesn't have to be. I always offer even an introduction call. So before you even start with any paperwork or credit pulls or anything like that, let's just talk. Because again, I want you to view me as a teammate. So I would say the biggest mistake I see clients make is trying to do the right thing, typically based off of what they're hearing from friends, family, or Google, instead of just deferring to the expert, right? Which is that loan officer.
So I'm going to actually be a little bit more cruel about this.
All right.
And I'm going to say the biggest mistake that first-time home buyers make, as well as second-time and third-time home buyers as well, is by, number one, contacting an online source. Okay. Going to one of these online sources where, nobody knows who the hell you are. I would also say that I really do not like most credit unions. Okay. Now hear what I'm saying and what I'm not saying. I definitely understand the importance of credit unions, and oftentimes they can give rates sometimes that are maybe hard to compete with out there. And then the other one I'm going to say is just walking into your bank at Bank of America or Truist, and you got somebody behind there who's like, oh, you can talk to this gal or this guy over here and sit down. Oftentimes what I feel, and this is what it's important, and this was going to be a question I was going to ask you, but I'm just going to freaking throw it out there. I think it's so darn important to have advocacy behind you, not just, let's be honest. A lot of times, you're good at what you do, and I'm sure you can get a lot of loans through that not everybody can. But I would also say that venture to say, tell me if I'm wrong on this, probably 75 to 80% of the loans that you close, somebody else probably could have closed it. But are they going to be giving the options and choices that you give them? Are they going to talk you through, and take you through I like to use the word shepherd, shepherd you through the process from beginning to end. And also, are they going to advocate for you once you've found that property and you're qualified, but the seller and the seller's agent doesn't know that, or, you need another, an advocate who's going to work with their real estate agent, contact that agent who's representing the seller to say, hey, look, you know what? Tom and Susie are freaking phenomenal. I mean, I've done this, and this, we can, we can close in X amount of time, slam dunk, whatever those terms are. In this market right now, while it's not as competitive and it's softened some, there's still many pockets that seem just about as hot today as they were in 2020, 2021. And that's where I believe you really need that team who's working for you. Advocacy, advocacy, advocacy. People who are fighting for you, not just sitting back there in, Timbuktu waiting to get an approved contract come in. I mean, I rely on you. I rely on a good, solid lender to be the, we are the right and left arm, we need to work together and to convince. It's like taking something to court here. We need to convince the judge or jury that we are unequivocally the right choice for this home seller. And you do that very well. And I think that's one of the most important things that most home buyers don't realize. They think it's like, oh, I'll find a house on Zillow or I'll find a house on Redfin, and then I'll just contact somebody, some ding dong who's going to open the door for them. And let me contact my credit union about getting a mortgage. I'm going to tell you, more often than not, in a market like this, you're going to fail.
Yeah. And I appreciate you saying that. And I would also say, like, if you're out there listening, like just have the preliminary conversations. It's the same thing on the real estate side too. Working with an excellent realtor such as Kevin is more important than ever, I would say, in this market and right now, but it always is. And I think that, when you start, you don't know what you don't know till you know. So I think you can kind of see it quickly. I love when we have mutual clients, Kevin, because I know they always walk away really well informed from your perspective as well. It makes my job easier as well. So I also appreciate it. Makes things easier for me. But it is important. And it is one of those things that, I'll speak on your behalf as well. We view our job as not just winning a contract for our client, but it's deeper than that. It's guiding them through one of the largest financial decisions that they might be making. But even if we just focus on that offer, it's okay, well, how do we win this contract for this buyer at the best terms available to our buyer, which may mean, as you said, Kevin, like having me call and sweet talk the listing agent so they know that, there won't be any issues and it'll be a smooth experience for all.
Yeah. And so once again, just kind of, I don't know that I was too cruel with what I just said. I was just more tough love, but this is where I'm going to be a little bit cruel. On my YouTube channel, Hillary, you can see many videos and where I say that 80% of the real estate agents absolutely suck. I think most of them suck. They shouldn't be in the business. There's a lot of dysfunction, a lot of people who couldn't make it in the private sector. You know what? I want to be my own boss. So let's get into real estate. And I'm going to say it, you and I, while I'm sure we're related somehow, maybe 6 degrees of Kevin Bacon or something. I mean, there's definitely, the real estate agents and mortgage lenders there is a love-hate thing there that does exist, but it's also kind of one of those relationship things where can't live with them, can't live without them, it's like, and so let's make the best of this. And I also say that a lot of times, you're probably not going to appreciate me saying this, but a lot of times I think we kind of come from the same gene pool. It's like, okay, you know what? Do I do real estate or do I do mortgage lending? Which one do I do? And I know a lot of people who bounce back and forth a few times because they're somewhat interrelated. But once again, I think that the mortgage lender you decide to work with really matters, especially in a competitive market like this, where you just can't expect to get any old pre-approval letter and work with any old real estate agent and think you're going to get really good results there. The chances are you're not, so I think the value of working with a great team out there it's of paramount importance, especially in a market like this. So,
Absolutely.
anyways, okay. So we've got Ryan asks, when searching, we may have covered a lot of this, but when searching for the right lender, what are the benefits of working with a company like Direct Mortgage over other options? Here's a good opportunity. Ryan teed it up for you. Go ahead, and you're a golfer, Hillary, so go ahead and crush this one.
I appreciate that. Yeah, no. What I would say is our main competitive advantage is the structure of our company. So we're what's called a correspondent lender. We're not a bank. We're not a broker. Kevin, did we lose you here? You're good.
Can you hear me?
I can. Can't see you though.
Okay, well, you can't see me. I think my camera just crapped out on me, but oh well, we're gonna keep going.
That's all right. So basically, I like to say we're the best of both worlds in that we are similar to a bank in that we have complete control over the process and that we have in-house, although since COVID, some people are still in their own homes, but it's all of our people. And that's also, I think, what sets my company, Direct Mortgage Loans, apart from so many others is that the people care. Every person that touches your file or is a part of this process on the mortgage side, they care. And the reality of our market is things come up, whether it's surprises on the appraisal or something, we talked about this in the beginning, something changes with your employment status along the way. It is so important that you are working with a team and a company that has that unwavering ultimate goal of getting you to closing while also making sure that you as the buyer are staying protected. So I would say that's the main thing that to me has always been so important. Service levels extremely important. The other thing I love about my company is just we're never okay with the status quo. We're always finding ways so that we can better serve our clients. So all of those things together are what made me choose the company to begin with, and also keeps me here and also keeps me excited to go to work every day. What was the second part of that question? Do you remember, Kevin?
Yeah, I am still here. But the second part of the question is, okay, so when searching for the right lender, what are the benefits of working with a company like Direct Mortgage over other options?
Yeah, here I'll throw out one more thing because we were talking about trends a little bit before. The other thing that is unique to our company, though there are some others that do it out there too, is we're also willing and able to put a ton of time and effort into you as a prospective buyer before you're even under contract on a property. So the other thing that has gotten really hot are commitment letters before someone's under contract. So basically a typical, we don't have to go into all of this, but typically we talk about what's the difference between a pre-qualification and a pre-approval. A pre-approval is more thorough than a pre-qualification. We now go one step further where we can get a human underwriter to put their eyes on the file, on the client's finances, and give a true loan commitment. And when you think about it, if you guys out there pretend you're a seller and you have one offer that says, hey, we ran credit and we've confirmed income, so take our word for it, these guys are good. And you have another offer on the table that says, hey, yes, we've done all of that. And we also have this human underwriter that has approved your loan. And literally all we need is title work and the appraisal. Your offer is going to look better. So that's the other really neat thing is that we're always looking for ways to help our clients win, whatever that means for that market, whatever that means for the client. And that's been, I think we've seen a big uptick in interest in that, and we have the infrastructure to make that happen.
Also agree too. I mean, I work for Compass and there's reasons why I work for them. That's another time and topic, but ultimately in the end, while and I know you've worked at other companies as well, Hillary, but I mean, wouldn't you also say while the company's important, the person you're hiring is more important?
Absolutely. There's no doubt about it. It's, you could be a really good loan officer and work for a mediocre to bad company and you're never going to do well. That's the reality. But as long as you have the basics from the company, it's the loan officer. And the other neat thing about when you're working with hopefully myself or even someone in a similar position, what a lot of people don't realize is we're 100% commissioned. And that actually makes us a little bit different. You mentioned before things like credit unions and the big banks. You know, even if you don't believe that I'm just an ethical person and I care about my clients, which I promise I do, I also can't put food on my table if I'm not, you know, keeping a great reputation in this market and making sure we get to closing and so forth. So you also have that added drive depending on the type of loan officer that you're talking to.
No, I completely agree. And I think also people want to work with a person, not necessarily a company, but it's nice to know that you've got that backing behind you and the things that, once again, in being able to give people better options and choices and hopefully a better experience, while they're working with you. So I've got another question here, and it says, as much as I love my home, I'm thinking I might love warmer weather more. And I can't say that I blame her for this. I'm considering selling my house and relocating. What is the best time to sell to maximize my home's value? Well, I think that one's more a question for me, and I am still here, guys. And I am able to drink the beer that I had here since nobody can see me. But who knows what was actually in the thermos that I was drinking out of, but that's just for everybody's guessing. But what I would say, that's a great question. And, there's so many factors that go into timing. I would definitely say in like the DMV, we definitely see that there is seasonality to the business, meaning that it's a little bit like, here on the East Coast here, like a lot of people here in Maryland might visit, Ocean City, Maryland, or the Rehoboth or so. And if you were going to go down there today to stay the weekend or so, you'd pay a heck of a lot less than if you were to go down there Memorial Day weekend, or you were going to go down there 4th of July weekend. And that's simply just because of supply and demand. So while, those vacation areas see seasonality, we do too, not nearly to the same level or extreme. But what I would say is typically, and I've done this for 30 years, with the exception of really the 2020 and 2021, which were those early COVID years where it just seasonality didn't seem to come into play at all. I typically would say the best times of any year, and whether that's a good year, quote unquote, or a bad year for real estate, I would say that the first and second quarter of any year for home sellers is the best time to put their home on the market. And believe it or not, we all hear, and we talked earlier, Hillary, about the spring market. Tell me if you think this is true, but our spring market really starts like a freaking few days after the holidays.
Absolutely.
I mean, buyers are out there in the marketplace ready to buy. I think they've got a New Year's resolution. What I find is they tend to be extremely aggressive as well. They're not finding much inventory out there. So, they've got a plan, they've got a purpose, they got a goal. And so I do find that really the spring market starts really in January. And I do find that, typically it's like a wave that starts building early in January. And then in my opinion, it kind of crests in like that mid to late April. And while May and June can be good months, it's kind of like the end of the market there, and then we typically see a slowdown in summer and then a bigger slowdown as you start getting closer to the holidays. And of course, last year, throw in a presidential election. I mean, that just made things even a little bit more difficult. But so I would just say, as far as timing goes, the first and second quarter, I would say probably the first quarter of the year is probably the best time. But really, it's, you can't just time everything. It really, a lot has to do with when you're ready. I mean, it might be the great market, but if your house isn't ready and you've got a lot of work to do to it to get it ready, and feasibly that can't be done for 3 or 4 months, then don't sweat the timing. Timing's important, but what's more important, I think, especially when selling a house, is the house. It needs to be ready. You as the owner need to be ready. Like, do you have all your stuff in order do you have that job, located in that other area and everything? So, from just a sheer question about timing, I would say in most years, it's almost every year, it's going to be probably those first 2 quarters of the year. But really, you got to factor in the house being ready and you being ready. So that's a great question.
I completely agree. I would also say, if you don't mind, if I chime in on the mortgage side of things, there is also make sure you're thinking about what does it look like when you are moving to that next place. If you're renting, a little bit easier. If you're thinking about buying, bring that lender in, bring someone like me into conversations and planning sooner rather than later. I will say the one piece of good news, I always say, as difficult and overwhelming as it sounds and feels to be a first-time buyer, sometimes to be a repeat buyer is even more complex, because now we're navigating already having that liability, your current mortgage, and maybe you have equity tied up in it, or you have that added, debt expense that we have to factor in for the new purchase. What I did want to throw out there, one product that I have been using with clients more and more, is a way for us to, we like to say, unlock the equity in your departing residence when you're purchasing a new home. Now, I will say overall, this is for the client that has a lot of equity, like at a minimum 30% equity in their departing residence. But there's ways that myself, and I'm sure some other lenders, that we can eliminate that liability from your ratios. We can give you a portion of your equity before you even actually sell that home, so you can utilize it for the next purchase to hopefully make that process a bit easier and less strenuous.
Would be commonly referred to as like a bridge loan or so. Is that what you're kind of discussing? Or
exactly, it's very similar. The only difference is it's a program where we are also guaranteeing that we will buy the property, the departing residence, from the buyer. So there's like a signed agreement for that, should they not actually be able to sell their home. So if we were just talking about a bridge loan, it becomes a little bit more complicated, because yes, that frees up cash for the client, but it doesn't help them on that debt ratio. It doesn't eliminate the mortgage liability. This allows us to accomplish both.
Yeah, that's awesome. So we have one more question, and then I'm gonna, unless we get another question that comes in, I'm gonna segue to something positive, because we're all trying to be positive, in a world of uncertainty. So we have a question here. It says from Aaron: is it possible to time the market? When is the Fed expected to make another rate announcement? Now, this one's an interesting one, because I think we've seen from the past that Fed interest rate cuts don't necessarily mean any huge changes in the mortgage market. So why don't you tackle that one, Hillary?
Yeah, exactly right. And great question. And it's a question we've all been asking ourselves. And I think right now, and Kevin, I know you brought it up also in past live streams here, we are in such a newly volatile market. We don't know. So my first piece of advice is, don't stress about guessing about the future. We can't even see Kevin's magic 8-ball right now, so we can't rely on that. But overall, the way, when we think about Fed rate cuts or rate hikes, that's short-term borrowing. So when the Fed announces a rate cut, we don't care about that in the mortgage world. Long-term debt, 30-year mortgages, what we care more about is their projection for future rate cuts. What's our new target rate? How long is it going to take us to get there? So I would say overall, the feedback we've been getting from the Fed more recently is just that it is going to be a slightly longer path until we see any sort of noticeable drops to interest rates, to mortgage rates, and the federal fund rate. So I would say overall, though, that's a good thing. If all of a sudden interest rates, the federal fund rate, and they say that we're going to start cutting those rates really quickly, and therefore then maybe we would see sharper declines in mortgage rates. If that were to happen, what would home values do, right? Things would go absolutely bonkers. So having this slow, steady, hopeful decline in rates is exactly what our market needs, in my opinion. So that's my belief on it.
Yeah. I do too. I mean, I don't see huge swing. Look at me, I'm back.
You're back.
Yeah, my camera done crapped out on me, so now I got it figured out where I'm on my laptop now. So anyways, so we're kind of winding down a little bit, but Hillary, I mean, kind of keeping some positivity here. I wanted to see that somebody says, Aaron says, nice profile picture. That was a COVID picture. I've got to update my picture. So anyways, hair was a little lighter or darker, I should say. Anyways, but that's just, Anyways, we'll move on. So tell us about a few like wins in the marketplace. Talk about some wins that are going on out there. Maybe some experiences you've had with recent, borrowers where they've struggled and maybe they went somewhere else and they had a bad experience, but with you, they ended up, doing well. Or just talk about wins in general. What are some of the things that you see going on out there that you would classify as a win?
Yeah, that's a great question. I would say one win that comes to mind that happened recently is part of how I view my job personally is not just getting you to the closing table and getting you pre-approved and giving you the guidance up front, but it's also being really aware that your finances as a homeowner and a home buyer is always changing. And the mortgage that you take out at the time of closing is going to hopefully be the best mortgage for you at that time. But as life progresses, as your financial profile progresses, as your home progresses, maybe increase home value and equity, therefore, there's opportunities for savings even once you're in this new mortgage. So something that I'm having a lot of our past clients, our closed clients do is work on seeing if they can get their mortgage insurance removed. For people who have not yet purchased, Kevin and I talk about how, yeah, interest rates have gone up, but home values in many areas are going up as well. That means our clients who have already purchased, we are seeing some really nice wins there and giving them some cash alleviation on their monthly payment should we be able to get that piece of their mortgage payment removed. So I would think that's a pretty big one. I would say the other thing, Kevin, I love are those we like to say first-time home buyers, but it's not just for first-time buyers. It's just overall local, usually government incentive programs based on where you're looking to buy. The one that stands out most recently is for those of you prospective home buyers in Maryland, there is a program that should you qualify, it will provide some assistance towards your down payment and or closing costs, but also give you up to $20,000 to pay off your student loan debt. And one of them, right? Pretty sweet. And so one of the largest hurdles right now is affordability. But if we can utilize programs like this, wipe out other non-housing debt, give you some breathing room to maybe hold a higher mortgage payment, expand affordability, those are the situations I love and have the pleasure of looking at all day long.
So, obviously part of with the Trump administration, we heard, a week, 10 days ago about, freezes on grants. These are not federal grants. I mean, and my understanding is those have been kind of released at this point, but I mean, we're not talking about federal grants or anything like that. We're talking about grants from where?
So they're typically, and they're usually not grants in that there's usually some stipulation on it. So this one, without getting too granular, reach out to me if you have any questions, but it's forgiven over 5 years. So every year you're in that home and the mortgage, it's forgiven by 20%. So they've actually, most of these local programs, which are, I would say more often coming from either the counties or the state, most of them have come out with guidance to give us and you prospective buyers reassurance that these unknowns and these, threats of things being paused will have no impact on these sorts of programs. The other thing for anyone listening is that internally with my company, we also have a 100% financing FHA product. You don't have to be a first-time home buyer. There are no income restrictions. So basically, just know if you're listening and you're thinking about buying a home and you have a million excuses of why you can't or shouldn't be buying right now, let's at least look at it. Let's talk about it. And before you make that concrete decision, let's use facts and just double check, because there's a lot of creativity out there for us to make it feasible and more beneficial for you guys.
Awesome. So I guess we're like I said, we're winding things up. So tell us a little bit about like what's the best way to reach out to you for anybody viewing. And by the way, this is all going to be done on replay, and so we're going to probably get a lot more views after this is posted. But what's the best way to get in touch with you? If people have questions about either buying or refinancing, any of those things.
Yeah, you can, I believe, see my email address on the screen there. Also, if you just jot down my name and Google me, that's the beautiful thing about Google. You could find me, call, text, email anytime. My cell phone number, if you guys want it, is 917-685-5437.
A nice New York number.
I know I don't have the heart to get rid of it, but I do scare a lot of people away with that 917 area code.
Well, you know what? You haven't scared. I don't think you've scared any of us tonight. But I just wanted to, thank you for. First of all, I have a question for you. Would you do this again?
I absolutely would. I love this.
Because we have a lot more topics. I mean, so I'm just going to kind of share this with the audience. This is I think it's my 5th live stream, and I've had really good guests on and everything. And, I've kind of come up with most of the topics, and I send out an outline and everything. And so, when I talked to Hillary a while back about doing this, I said, maybe you want to throw out some ideas of things you want to talk about. I got this friggin' outline that was like, I'm like, oh my gosh, this is like, we could be doing live streams like every week, through, up until August or so with all the details. So we definitely, and I also wanted to kind of talk about the whole thing that's going on, with the Trump administration right now, because, especially in our area, it's a big topic. It's fluid. There's a lot, we're going to see changes. There's no doubt about it. It's just kind of like not sure where it's going to go at this point. But there's a lot more topics that we can discuss. But lastly, I mean, any like niche type things? I mean, you mentioned some of the things with down payment assistance and things like that, but any other like cool niche products, like one last one that you could throw out there where like somebody might be saying, wow, actually that might work for me?
I would just say, because right now, again, one of the experiences I'm having a lot with clients is that they are feeling really burdened by their debt load. And the most frustrating thing is, and it's a reality, is that we need someone's credit report and credit score to know what they qualify for. So with that said, I would just say the underwriting requirements for some of these programs, especially like what we call an FHA loan, is more lenient than most people expect. So that's the other thing. If you're listening to this and you're like, I don't think I qualify, that's the other thing. I'm always willing and able and happy to give you guys advice on things that we can do to improve your situation. But you can buy a home, whether you need down payment assistance, whether you have credit struggles, whether you have income that might be difficult to document. If you're self-employed and you're getting ready to file those taxes, we even have bank statement programs now where for self-employed individuals, we can calculate your income using that if we have to. So I would just say, I don't know, I could list 8 million things, but it's just, if you have apprehensions about buying a home, talk to me, talk to a lender. There's very well a solution out there for you. So don't be nervous.
I'm just going to say, talk to you. Don't talk to any other lender, because, you're also, I imagine you probably have a lot of people that, they come in and they're apprehensive. Some people, you probably have some pretty good stories of people who thought, I can't do this, but you know what, I'm going to try. And they realize, oh my gosh, I really can do this. This is a reality. And then I would imagine, like, because I see this as well from my end, where you have people, who, okay, maybe they can't do it now, but you can actually show them that the things that they can do. And sometimes this might only be over a few months, 2 to 3 months, 6 months, where it's like, they can bring their credit score up from one level to another level, which now qualifies them. Or maybe, creative ways that, a lot of times I see people, they think that they need to pay everything off. And while it's important, to obviously be fiscally responsible, I think people feel like, oh, I just got to pay this off because I'll never be able to qualify unless I pay this off. And oftentimes, it might mean paying it down to what, like 20%?
27% is the magic number we usually have.
Thank you. I was guessing when I said 20, but yeah, thank you for throwing me a lifeline there. But 27% is that magic number where it's just like, and maybe, that might mean the difference of being able to buy something in 2 or 3 months versus, a year or so. Yeah. But the key is that knowledge is power. Wouldn't you say? I mean, knowledge is really understanding, and then having, if you can't do it now, having a freaking goal to be able to get there. Right.
And that's, I always say it's nearly impossible to save or tackle goals until you have those actual goals. So whatever it is, I completely agree. Having that roadmap to make sure that you are putting your time, energy, and money to the best use, it can only help.
Awesome. Well, Hillary, I want to thank you for being here. You were an awesome guest, and thank you for rolling with me when my camera went out and I was, incognito and everything. But you were awesome, and I was kind of. It's funny because while I was off screen, I'm walking back, checking out my camera, and you just kept talking along here. I was like afraid that you would like just stop all of a sudden, and I was like nowhere near the mic, and I'd be like, "Oh shit,"
Well, going back to I'm a New Yorker, so talking is one thing I'm very good at.
New Yorker. So, anyways, well, thank you for this, and so we appreciate you, and for all of you guys out there, that I appreciate your questions. I appreciate you watching. I appreciate those of you who've subscribed to my YouTube channel. If you haven't, I invite you to do so. And just like with Hillary, when it comes to any real estate questions you have, whether it be buying, whether it be selling. And it doesn't have to be right now. Maybe it's something that like I say, we talked about with Hillary, where it's just something you're thinking about doing maybe later this year or next year. Maybe somebody that's thinking about buying or selling a house. Always feel free to reach out to me. We've got a QR code we're going to put up there. The first QR code, that referral, is if you're outside of the area and you're looking for a top agent, because I already told you that 80% of the agents out there, and that's not just the DMV, 80% of the agents out there really suck. So if you're outside of the area and you're looking for a good real estate agent, the good news is I network with many of the top real estate agents throughout the country. So I have a vast network, and I can actually help you get to a great agent who will listen to you, take care of you. They won't push you. They won't prod you. And there's no obligation to work with them. So if you're interested in a referral to an agent outside of the DMV, you want to scan that referral code. It'll take you to my website. Fill out your information. We'll have a quick call, discuss some of the things you're looking for. Don't worry, I won't stalk you, but we'll just make sure that we get you over to the right agent for you. And then if you have any questions about real estate at all, and you want to discuss one-on-one directly with me, feel free to go ahead and scan that Calendly link on below, and we can set up a one-on-one via Google Meet. And we can discuss whatever you want to discuss when it comes to real estate. And as always, it's super simple to get me. You can always text me at 240-793-7495. But want to thank Hillary once again. Thank you guys for joining in, and wishing you guys all the best. And we got the Super Bowl coming up, so we will do our next week. Talk a little bit about real estate. So see you guys, everybody, and have a